The stock market made simple. I've been making it simple for folks like you for over 50 years. Let's begin. Do you realize that the only group that's working, that's going up, is gold? The gold stock. Here, let me show you. And I'm going to tell you why. The biggest problem we've had was all the markets, when we hit December of 2024, they stopped dead. And they just kept going sideways because the institutions stopped purchasing. Why? Because the valuations are insane. Gold continued to rally. So with the overvaluations, that caused a big problem. I'm going to show you in a moment. But first, look at this. So gold's going up, but take a look at this. Bitcoin stock, same thing. Stopped in December, sideways, and now collapsing. Take a look at this. Again, gold is doing better than Bitcoin. So there's no question where you want to be, Bitcoin or gold. I'm talking the stock now. Take a look at this. This is what they don't want you to know. Look at the trend. This is IWM. This is the small mid-cap stocks, the heart and the soul of the business of the country. When this breaks down like this, it's over. This is what Wall Street doesn't want you to know. And they don't want to talk about, but this is a disaster. Why? Because, again, you can see, again, in December, we stopped going up, and we were going sideways. And every time they try to break out, it's failing. Look, it's trying to fail now. The Qs, same thing, failed in December, went sideways, can't break out. It is now failing as well. Everything's failing. Why? What's going on? Well, first of all, the confidence, consumer confidence is terrible. In January, it came out a negative 10%. I mean, that's horrible. Double more than what they expected. February, they also came out consumer confidence number very bad. Same thing. There's no confidence. So the consumers aren't purchasing. Here, and look what happens. New orders. This goes back to 2000, right before the dot-com crash. Before a crash, people stopped spending. That's why this crash happens, because there's no earnings, and people stop. So look at this. Right before the dot-com crash, the durable goods, those are the big ticket items, they stopped buying, they collapsed. And when your big ticket items collapse, that's what we depend on for growth in this country. We're talking about automobiles, we're talking about furniture, we're talking about the big ticket items, we're talking about TVs, big screen TVs. When they stop buying, look what's happened to the economy. Bam, market crash. The housing, financial, same thing. Look what happened here. Durable goods, stop, market crash. 2020, durable goods orders, stop dead, market crash. Here we are today, 2025. You can see what's going on. It's starting to roll over again. Now look at this. This tells you the truth. What on earth is going on here? 1929, 1996, 1999, and here we are today. What do they all have in common? Valuations. Stocks are overvalued, but it's not just, it's across the board. I don't care if it's PE ratios, I don't care if it's trailing, I don't care if it's EBITDA, I don't care if it's market cap to GDP. We have a broad overvaluation of everything. And that's when these markets all crashed. 1929, almost 80, 90%. 1966, nearly 30%. 1999, I think that was about another 70%. And this one is going to be a whopper. Here we are today. So that's what is going on. So if you want to know what's going on in the market, everybody asks that big question. Just keep following me. I'll show you what's going on. And this is the truth. And this is what you need to know. Make it easy for you. And I've been doing that also with my charts, the information I give my folks. So check it out. Just click the link to my bio. I'll see you on the charts.